Hi, good afternoon. You're watching Closing Trades right here on 18 Hour with me, Aisha Faridi, Vinny Motiwala, Ajay Sharma in the studios. And we're status quo, really. We've definitely resurrected from the weakness yesterday, saw a bit of a recovery coming in, and that also is now getting sold into. Having said that, we're definitely off significantly from the day's lows. So lying flat as we speak right now, skirting around the 21,900 print. For the Nifty futures, Eicher Motors, Maruti, you've got a Techem, Reliance Industries, of course, duly supporting the index today, and that I think is the maximum contributor on the index. SBI, L&T, ITC are all holding out well. What continues to be a drag, though, on the other hand, Tata Motors, Tata Steel, Tata Consumer, they're all under pressure today. There's also pressure coming in from an Axis Bank, from an HCL Technologies and HDFC Bank as well, which is weighing heavy on the markets. But Ajay, what about the broader markets?
Well, broader markets have done pretty well. I'd say that, 10-11% on the top is what we had corrected. But this afternoon, around 11 o'clock is when we started recovering very smartly. Nifty was 21,700 or thereabout at that time. And since then, broader markets have recovered, almost breaking to the green. Now, the point we were discussing, and I'll bring it up with Kunal as well, is that we may have corrected 10-11% from top, but small cap index. I was looking at some of the most trader favorite or HNI favorite names, say Swan, say DB Realty, Engineers India, Dredging Corp. Most of these stocks are already down 30, 40, in some cases 45, 50%.
Correct.
Can we say with, high degree of confidence now, Kunal, that we should not wait for the small cap index as a whole to correct 25, 30%.
Correct.
But half or say 30, 40% of the ingredients have already corrected that much. Is that a right way, or you wouldn't be that?
No, I think it's a perfect way to look at, Ajay, because first of all, not all stocks will correct in the same manner. The high beta stocks will correct more, the low beta stocks or the formidable ones will correct far more less. Just to give a very simple example, on the PSU banking index overall, SBI has just corrected, I think, 9% or 10% from its swing highs, as compared to many of the other PSU banking stocks, which have corrected by a degree of, I think, 25 to 30% also, the mid-cap ones. So that itself tells you that the high beta ones or the index may not replicate exactly what happens to the stocks. Now, there are two very important data points or interesting data points which I've called out. One is that I've looked at the market breadth indicator, which actually has come back to that March 2023 levels for the overall market. So at current levels, where we are in terms of the indices, we are actually, if we've tapped back into a strong oversold territory on the market breadth. So this is not on the index front, this is on the overall market market front. So that indicates that we probably would have hit a bottom, or in the next 1 or 2 days, so I think we should be hitting a major bottom for the overall market breadth, and we could probably be seeing a significant rally for the overall market as well as indices. And the second and the most important part is midway, when the indices were down some 150 points, 500 points on the Bank Nifty, the put call ratio had entered into 0.45, 0.5 levels. These are again very strong sentiment indicators that was extremely pessimistic at the lows of the day intraday for the indices. That's where you should see a very strong relief rally.
In fact, that's a very pertinent point, Ajay, that you made, that, why wait for the index to bottom out when the maximum pain point was in individual portfolios, some of the HNI portfolios, and those stocks have already fallen about, 30 to 40 odd percent.
And there are only 6 trading days left for 31st
this month,
March.
yeah.
We are already seeing early signs that forced liquidation, and this is a typical pattern which plays out. I've been speaking with some of the big HNIs across the country. Suppose you're running a 1,000 crore portfolio, dedicated on the mid-cap, small-cap side, they tend to go overboard and run a 1,500 or 1,250 or 30-40% leverage in great times. The moment they start looking at the market turning, they start reducing, and the leverage gets wiped out completely at the bottom. And we got traces of that in the last 1 week or so. Anyways, there is another very important event to watch out for, and we'll wake up to that tomorrow morning, and that's the Fed meet. We've got Pankaj